I just had 1 hour discussion with an ex Wall Street quant trader and learned a lot of really valuable insights about whether AI will replace quant traders in the hedge funds like Millennium, Citadel, and Bridgewater. When AI is powerful enough to disrupt pretty much all the industries in the world now, it's an easy bet that AI can replace the quants, who are very expensive individuals building algorithms to make profit from the stock or crypto markets. For anyone who doesn't know what quants do, they are a group of super intelligent PhD graduates, very good at crunching numbers and building algorithms to find patterns and make huge profits through high speed automated trading. The top quant can make over $1 million a year based on performance. And there are two types of quants, quant researchers and quant developers. The difference is if the person knows how to code with Python, C++, or other programming languages. Now, with AI, everyone assumes that these super expensive quants can be replaced by AI. But my quant friend told me that in reality, it's not that simple. A tier one trading firm actually hired a team of top Google AI talents to build an AI quant trader within the company this year, and finally shut it down after a few months of development. The obvious pros are that compared to the traditional machine learning AI, the LLMs have a much larger training data set from all different types of sources, where machine learning AI can only train on a labeled data set from a narrow set of data sources. AI can also tirelessly monitor and fine tune the algorithm with real time data, where the quants have only a few hours a day on the task and they also need to take time off or vacations. The last one is very obvious if you compare my $20 ChatGPT with a $1 million quant. But that's not a good comparison because an AI quant also needs training on particular data from the code bases and historical trading data sets to build strategies, which leads to the cons. Privacy or anti-theft is the most important thing for the training firms because they have spent millions of dollars and years of building to develop the trading strategies. And if AI can get access to all these proprietary assets, then there's a huge risk that they will lose their alpha and won't be able to make as much profit, which will lead to closing the shop eventually. The second con is AI is still hallucinating, and no one can predict or prevent this from happening. If a strategy is built based on a hallucination, then millions of dollars will be lost, and it will also be the end of the firm. The last one is the same as Harvey AI. When AI is used in highly regulated space like law and finance, it needs supervision. So my quant friend told me that a few years ago, he wouldn't have believed AI could replace him. But now he thinks it can happen under only one condition. The AI needs to be supervised by a quant. So AI must be able to explain the reasoning behind the strategies, then it's not particularly attractive for the firms to have both human and AI quants. In general, I feel it's the same as the assumption that AI can replace developers now. From my experience with vibe coding as a former developer, and after talking to very experienced developers, AI replacing programming work isn't going to happen within the next 2 years because programming needs more than just code. It needs an environment setup, data modeling, maintenance, etc. It's not just like building a website and it will run automatically by itself every day. It still needs a developer to fix and maintain it. Hope that all makes sense. And that's for today's Daily AI Insights. Please subscribe and let me know what you are interested in the comments below. I will reply to each of them. Thank you. Salut.